Good morning. Assalamu alaikum. I would like to welcome you all for the analyst and investor presentation for Al Madina Insurance Company SOG FY-2026-H1 results. Before we move on, we start with the introduction. Myself, Hitesh Popat, Head of Finance as well as the Investor Relation Officer of the company. Joining with me in today's session is our Deputy CEO, Mr. Shakib Mahmood, our Head of Operation, Mr. Anish Varghese. Before we go into the agenda, we would like to thank MSX and FSA for providing us with the opportunity where we can meet and interact with the investor and analyst community. We have a brief agenda for today. We'll start with the company overview, company's past performance snapshot, HY 2026 results, outlook, followed by a Q&A session. With this, I would like to hand over the forum to our Deputy CEO, Mr. Shakib, who will give a company overview.
Thank you very much, Hitesh, for that introduction. And thank you very much to all of you for coming and joining us. It's a very good initiative that MSX started a couple of years or maybe 3 years ago, where the investors, analysts, and we come together, we have a dialogue, meaningful dialogue. So I take you through the company's vision, etc., and how we have been doing it historically. Then I'll ask Hitesh to give you what has happened this year, and the outlook would be by my colleague Anish Varghese. Please feel free whenever you want to stop me, ask me any questions during the presentation or afterwards in the question answer session. More than happy to answer that. Let's make it a more meaningful two-way communication rather than we just doing it. So as we always say, the vision of the company is to be the leading insurance company in the Sultanate of Oman. And I say leading insurance company, I do not say leading takaful company. So that means I'm talking about the entire sector as an insurance company, both takaful and conventional. The leadership, where the leadership is measured by profitability of its stakeholder, and the stakeholders are both participants and the shareholders. The company has been paying dividend for 11 years continuously. We have paid almost 75% in dividends, so that part of it we take care of very, very well. Satisfaction for its customers, and when I say customer, it's both people who are buying policies and where the claims are registered with us. In terms of the policies, we have the most transparent terms and conditions in our policies, so people know what they're buying. There's no hidden things in there. In terms of the claims, we look after our claimants empathetically, and that shows when there was a Gonu, then the Shaheen, we started settling claims immediately. We open up kiosks and places to register claims where it actually happened. In terms of the commitment of its employees, our colleagues, the employees are probably the most happy in the industry. And this is, I'm saying, because our turnover ratio is about 8%. And people who go from us face the other side of the world. They want to come back, and many have come back to us. That shows the commitment to our employees and their happiness. Otherwise, in the industry, 20% is considered more or less normal, but we are about 8%. In terms of our mission, the mission of the company is to provide cost-effective insurance solutions. And I keep saying this: cost-effective does not mean cheap. Cost-effective means whatever price you are paying, you get the value for it. And you see that, okay, I paid maybe 1 riyal more, but the value was much more than the competitors. Superior customer services, and in a manner that is compliant with Sharia. So Sharia compliance is important for us, the paramount. We have a Sharia board which is very rigorous in their, doing our businesses. The values are that we do continuously do innovation. We are socially responsible. We have transparency in our conduct. Integrity is paramount, and teamwork is important to be a successful company. All these things, the clean finance is becoming the theme of the world right now. Everybody is moving from the from clean towards clean finance, and hence ESG and the other things are gaining momentum. But Takaful always had it. We have engraved in our DNA the clean finance, i.e., the economic, the environmental, the social, and the governance. All the three are part and parcel of Takaful because the Islamic finance is clean finance. We cannot go do gambling or we cannot ensure the liquor things. We cannot invest where the riba is involved. We look for our societies in terms of charity, the social work which we do. We clean our earning by giving zakah. Hiba is another concept. In terms of the societies, we train Omanis. We want to go out and help Omanis. So the basic purpose of Takaful is not just money-making machine or profitability. It is serving your society, and that's why the values are very much engraved there. Moving on to the next slide. From last year mid to this year mid, i.e. June 2026, we have been receiving a number of awards in various fields. And this is a testament of what I've been saying about my company, our company. On that basis, I'll start from the right-hand corner, which is down right-hand corner. And there we received the ESG Award for International CSR Excellence Award, gold category. Then we got the Digital Payment Acquirer Excellence Award from NBO. So the digital payments, etc., comes into play there. Then the third in the bottom is Oman Most Trusted Brand for 2025. And this is a very important award because trust is everything in the insurance industry. If you don't get the trust, then you can't do anything. The Apex publication did this survey, and it was an online voting survey where almost 1 million people in Oman voted us as the most trusted brand. And I want to remind you, the population of Oman is 5.3 million as of 30th June 2026. So each person, if he has 3 or 4 family members, pretty much everybody voted for us. The entire Oman said that we are the most trusted brand. I'm very proud of that achievement. Then we got Insurance Company of the Year in Oman Leadership Award 2025. It's an insurance company. It's not a Takaful company, so keep that in mind. Then we have Customer Service Excellence Award at Oman Insurance Summit in 2026. This is our backbone. We thrive on customer service, and we get many awards for customer service. That's again something which is confirming my statement. And the biggest of the all, we got the best general Takaful provider in the Middle East. And Middle East, mind you, includes about 17 countries. This was hosted by an organization, Global Banking and Finance Awards in London. And we were interviewed at the London Stock Exchange there in their state-of-art studios. Those interviews are available online on their site, even on YouTube. I would like to just show you the initial 2 minutes of that video, although the interview is about 20-25 minutes, but this is just 2 minutes of that presentation. There's a proud moment for us. I don't think any company has got the best in the Middle East in terms of the Takaful or insurance for that matter. So here it is.
From London, Global Banking and Finance Awards highlight the innovation, achievement, strategy, progressive and inspirational changes taking place within the global financial community. The awards were created to recognize companies of all sizes who've excelled in particular areas of expertise and excellence within the global financial community. This time we're glad to offer Al Madina Takaful Insurance an award for services across Oman and the Middle East. Al Madina offers a range of insurance services. Their high-tech operation means you can insure online in minutes and download your policy wherever you're based. Global Banking is pleased to award Al Madina an award for Best General Takaful Provider Middle East 2026. Deputy CEO Shakib Mahmood and General Manager Anish Varghese came to London to collect the award and later spoke to me about Al Madina's impressive success story. Well, gentlemen, welcome to London and thank you for talking to us today. And indeed, congratulations for winning the Best General Tackle Provider Middle East from Global Banking and Finance.
Thank you very much, Phil. It's been an honor for us to be receiving this award from the Global Banking Finance today. But I must tell you that this is our fourth this year. We have received an award for the best insurance company in Oman, the most trusted brand in Oman. And this was a survey done by a publication house where 1 million people participated. And if you assume that everybody has 3 family members, so that means almost 50% of the population voted for us. It's a 6 million population in Oman. So we are delighted to receive this award from you. It's probably the right time.
So I was in that short part of the interview. You can see the entire interview on the YouTube link, which is given there. I was wrong in 2 things. One, I said the Oman has 6 million population, which is 5.3. And the other, I said this is the 4th. Actually, it is 6th. No, actually 7th. We have got another award, which is not there on this slide, was from the Ministry of Finance for the best tax tax excellence award for complying with the taxation laws and the good corporate governance. We received another award. So awards are raining from all over the place. Although we don't like rains because then the claims increase quite a bit. But this rain is different. We like this rain. Here is the evolution of the company, Oman's top couple insurance provider. We were established in 2006 in Oman, as Al Madina was a conventional company at that time. And then in 2014, Al Madina converted into full-fledged Takaful company. We grow from about 3.8 million to about now 55 million company in last 10 years or so. The company was established with all kind of insurance we do, general, the health, the family. We have about 7 branches and 2 kiosks across Oman. Al Madina has maybe the highest share capital. I'm not sure about it, but maybe 17.5 million in Oman, whereas the insurance company required only 10 million. So we are very well capitalized company, strictly adhering to the Sharia principle because we are takaful, so no compromises on there. And as I said, we've been paying dividends for the last 11 years, 20 years of the operations of the company, including when we were conventional, and we are still evolving, we are still growing, and inshallah, we continue to grow. Here it shows you how we grew in terms of the top line. Although I don't care about the top line too much, this is not my philosophy. I am more bothered and I'm a person of the bottom line. But it gives you an indication how people are trusting us, how the business is gravitating towards us. It's from 3.8 million in 2007 to about 55.7 million in 2025. And 26, we are still growing. We have at the half year 26.8 million. Most of the businesses renew towards the end of the year, so we hope we will achieve our targets. So that's the growth on the top line. As you all know, we are in a business of risk management, and we try to foster harmony for all our stakeholders. I think I've spoken about it. The company operates in general, family, and health segment, and under Wakala and Mudaraba model for the investments. The leading insurer in the energy, power, medical, and corporate segment within the market. I think we are the biggest in terms of the energy insurer. We have built customer loyalty by their exceptional experience. Well-established partner with the major Islamic bank in Oman, diverse client base, multiple industry. The most important of all is our highly qualified underwriting and claim teams with expertise spanning across Middle East, Europe, and Asian subcontinent. That's the main point in here, because that makes your business profitable or loss-making. That makes the difference. So we have that bench very, very strong. People with us for like 12 years, 15 years. The stability is there. The stable and experienced management team with one of the lowest staff turnover I've already talked about, efficient claim management with international best practices, and we do actuarial valuation of our reserves each quarter. And we have not only one, but we have two actuaries working with us of the international repute. So that's our philosophy in a nutshell. Any questions, I'll be happy to answer. Moving on, as a company, we have done many firsts in Oman, and we are very proud of that. We are the first takaful company of the Oman, the first company which was established, first to achieve profitability in both shareholder and participant funds. Most companies, what they do, they transfer profitability from participants fund to shareholders, and participant fund remains in loss. We are the only company in the country, and very few in the region, who are profitable in both. We were the first to pay dividend consistently for 11 years without a fail. First to successfully maintain a balanced position between shareholders' funds and participant fund. Now, here I'm not talking about profitability. I'm talking about the balance sheet position where the accumulated profit set, and we have surplus in both. First to secure Category A health insurance license from FSA. First to publish the ESG report in 2024, earning gold accreditation from a prestigious International Excellence Gold Award institution. This we published even when it was not made mandatory. There was no law by FSA that you have to publish this report. We put ourselves accountable. We said we are already doing it, so why not we be the first? So we printed that report first in the industry. First to establish market agreement with Postal Department and Sanad. We are the first in the best client service, which we get for consecutively, and this is done by a global international broker stroke RI company who do the survey in Oman, and by far we are the best in all parameters. I think they rate on 7 or 8 parameters. I think next time we'll put some graph there, which shows across the board we are far ahead of the industry. Industry meaning insurance industry, not the takaful. First to introduce flexible working hours for all female employees who are nursing their children, or they have they're expecting, or they have some issues. They go 2:30 p.m. from the offices. They can continue working from home or whatever, but we allow them to go 2:30. And in terms of the regulation also, we are first successfully to advocate amendments to the takaful regulation when it was being drafted. And we got it, the FSA to remove contingency reserve requirement from the takaful industry. It is still for the insurance industry, contingency reserve is a must, but we convinced them that this is not required. And hopefully in the new law, they will take it away for the insurance industry also. So we are the pioneers to do that in the insurance industry, which is a feather in the cap. First to introduce HIBA in Oman and probably in the region. Nobody knew about HIBA before we started doing it. And then people start asking us how you did HIBA, whether it's allowed under the IOFE or not. Even IOFE, which is a standard setting body, is awakening to HIBA now. And soon they will come out with a standard on HIBA, how to do it, what to do it, how do you know, all those things. Now they are thinking about it. We did it 5 years ago.
Yeah.
So that's all the first. It shows the company and company's management thinks out of the box. We want to do everything first in this industry. We want to provide value to both the shareholders and the participant and the investors and all of you. We are the champions of the in-country value. Many are not. Many are just doing their business outside Oman, and the insurance companies just become the fronting partner. We try to do everything within the Oman so that it increases the GDP, so that thank you, Anish, it creates jobs for the Omani people. We are legally maintained Omanization. We are beyond that. We do recruitment and training of Omani nationals. We have a training program which creates leaders for the future. And we get assessment done by a third-party professional firm for our Omani employees. Business, as much as possible, we retain in the Oman. We provide ICV through CSR, so in-country value through CSR. So all CSR efforts are concentrated within Oman. More than 85% of our investment are within Oman. And investment is a very limited field for the Sharia industry, as you would know. We cannot go into the market and invest into a company which takes loan from a conventional bank. So if I go and invest in Bank Muscat, I can't. Omantel, I can't. Uridu, I can't. It's so much so that even this flour company, Salala Mills, I can't. Oman Flour Mill, I can't, because they have all taken loans from the conventional banks, and the interest element is sitting in their profit or expense. So they are forbidden for us, but we try to do as much as possible within the Oman. And so 85% is the benchmark. I will talk about a little bit of the historic performance of the company, and I'm taking 5 years, and because 10 years will make the slide very, very cumbersome and busy and boring. Top line I've already talked about. The top line grew from 3 million to 56 million, so forget about it. Investment income grew from 1.3 million to 1.7.5 million within a span of 5 years. So that's the growth, and you see the Manhattan is going in one direction only. The profit after tax also shows it was 1.3 million, and last year it was 2.5 million. Although I would say that last year had an element of the new standard also, which made a few things topsy-turvy, and you had to restate your financial statement from the beginning. So some company got the benefit, some got the other side of it. So a little bit of element is there, but still our profitability far exceeded 2024. Now this is what I keep beating about the dividend payouts, because one, we are very proud of it. Second, we want to keep ourselves under pressure, showing those graphs and saying to ourselves that we should not go below what we have been doing it. So we have given almost 72.5% as the return to the shareholder in last 11 years, from 2014 onwards. And I'm very proud to say that the yield of our share for the analyst may be one of the best in Oman. If you see, take last 5-6 years, where we started to really maintain profitability and pay dividend from 2020 till 25, we have paid almost on an average 7.75% of dividend. And the share price is about 113 bezel. So if you calculate the yield come out to 6.8%, as opposed to a very big, the most profitable bank in Oman. I don't want to take names, you know it already. They pay 18% dividend, but their share price is 397 bezel today. So the yield is only 4.53%. So anybody who's investing with us, getting a yield of 6.8, whereas if you go to that big, large bank, 4.53. That's my point here. Well, I've come to the end of my section of talking. If you have any questions, please open your mics, ask me whatever you want to. I'm very happy. I'm a talkative person to reply back to your questions. Okay, fine, please.
Hi. Can you
Introduce
tell me-
yourself and ask the question.
Yes, my name is
Introduce
Abbas Muslimi. My name is Abbas Muslimi. I'm the CIO of Ubar Capital. Also
Okay.
a shareholder in Medina Takaful through my various clients. Specifically, I have a question regarding the policy holders and the shareholders' retain earnings. Now, is there a concentrated strategy to increase the wakala fees in a way that you guys make the policy holders retain earnings zero, which makes sense to me because at the end of the day, you are the operator, so that the profitability of the shareholders goes up and the retained earning of the shareholder goes up and reflects the sort of addition that you have in the policy holders, retained earnings.
Abbas, thank you for your question. One, the strategy is not as such to make it zero or whatever. The strategy is, and you said by increasing the wakala fees so that you can transfer everything else. For your information, we reduced the wakala fees for health insurance from 20 to 10% just recently. So we made it half. So it negates your point. The strategy is to bring about equality, and if IFRS 17 equivalent IOP, which is FEST 42, 43, created some imbalance between the two, then we very actively try to bring in balance between both the funds. Have I answered your question?
No, I didn't understand the imbalance part. That part is not very clear to me.
Do you understand FEST 42?
No, I don't.
Okay, so the FEST 42 is a standard. No, nobody understands. There's nothing to feel bad about it. It's just something very peculiar, and even most of the professionals are still learning. I'm also learning. The FAST 42, what it did is created an imbalance by restating all the financial statement. This is the first standard, which is as if it is always was existing. So you have to go into the past, open all your accounts, and retrospectively restate your financial statement. So what happens? Because of certain changes in the FAST 42, I think for most of the listeners, it'll become too technical, so I'll keep it very basic. There are two things in the FAST 42. One is your wakala fee is spread across the life of the policy. So if the policy is 2 years, it go over 2 years. If it is 3 years, over 3 years. In case of family, 20 years, then it goes on 20 years. But the expenses are taken immediately. If you have an acquisition cost taken immediately, it hits immediately. One, creating imbalance here. Secondly, if you have an onerous contract, which you believe that after 20 years it'll make a loss, you have to take the loss immediately in the accounts of the participants. Thirdly, if you are calculating, if you are aware of the insurance industry, you take the loss ratio and you add wakala fee onto it, and then you have ULAE you add onto it. If it goes beyond 100, it becomes onerous. So if wakala fees is 20 and your loss ratio is 80 is 100, ULA is another 10%, then 110. That 10 you have to immediately recognize. It may happen that in future this become profitable because ULAE is not what it ultimately unfold. So these things created imbalance. And I have raised these things with the IOF board also, telling them your standard does not make sense for Takaful and you are killing Takaful by doing this. And I'm very happy to report that they have accepted my views and they said they will relook into this standard. Uh, One would say, oh, who will relook into this standard? Is this talking over the top? I was in a global conference with the IOF on a standard which is in the draft form right now for the Takaful. And I told them this doesn't make sense. And I, criticized it so much that they withdrew that standard. The next time when they came with the new standard, I was the keynote speaker for the global forum. And Medina was the sponsor for that standard discussion board. And they came up with a new standard. So I'm very hopeful they will change certain things in the standard. We are trying to rebalance, bringing the situation to a level which is more logical under the previous standards and taking the anomaly out of the imbalances.
Okay, thank you. Thank you for this, and looking forward to actually hearing more about this in terms of progress and how IOF has responded to your feedback. Just
So
if you
you,
move away, if I just move away from obviously the accounting treatment and the new sort of accounting standards and just focus on the business in Oman, could you reflect on what's going on in the market? How are the loss ratios behaving in the motor segment, the medical segment? Which are the businesses you are interested in growing?
see, yeah, go on.
No. Basically, I wanted to get your view of the market, what's happening, what are the trends you're liking, what things you're not liking. It's very important for me to speak to someone like you. I know you for many years now, and I've had interaction with you in the past as well. So it's very interesting to talk to you and take advantage of this forum to understand how you see the markets.
Sure. I think two, three things are happening in the market. And if I miss out, Anish will add on because he's the business guy. One, the CMA is coming out with a FSA, sorry, the CMA is the old name, coming out with the new insurance law, which will make things more stringent, give more power to the regulators, etc., which is under discussion. We'll be discussing then. The second is the mandatory health insurance, which they are talking about for the last 3 years. Seems to be that they are serious about it now, and it will soon come. Then the health insurance penetration will increase. If the volume increases, then probably the profitability stabilizes. Because right now, most companies in Oman are making losses in the health insurance. The prices are so competition driven that you never make profits on them. We are the only company which were making profits. But with the new standard, now it will be a technical loss, as I explained to you. Although you're making profit, but you have to add on Wakala fee and ULA and all that. It will take you to a technical loss, and then slowly you will come out because eventually these things will unwind and open. So that's the second thing happening in the market. Thirdly, motor, because there was lots of rains, as you know, in March and April. So the claims have gone quite high in the entire industry. So industry is relooking at the pricing. The third party pricing was in between was raised for one day, and then FSA came back and said, no, you have to revert back because a lot of public was unhappy about it. Some projects are coming in the market, but not much. Anish, you want to add on something else on the?
Maybe just I will have one point only here, because now we are seeing a lot of pricing correction in a health insurance segment since you raised that point. Because we have seen that in the past, a couple of players in the market, they've gone very aggressively and then they suffered huge losses. Even at that stage, Al Madina maintained our profitability even in the health insurance segment. Now, as they suffered huge losses, now the entire market is witnessing a price correction in the health insurance segment, which will definitely improve the profitability of the company.
Thank you,
And
Abbas.
can you-
Anything else?
Yes, can you comment on the group life and credit life product? I was talking to one of the competitors in the Takaful side, and it seems this is a very interesting market for the sector, and quite profitable.
Competitor? Which competitor? We don't have any competitor. Do we? Do we? Okay, the other company. Yeah, okay.
So
Group,
could
yeah,
you
please go ahead.
talk about group life, credit life? How are you seeing this business? Is there big focus on this business, trying to bring, and do you have any significant tie-ups with banks or large corporates? Just want to understand what's your strategy on this business.
Maybe Mr. Abbas, maybe I can give some insights over here. If you look at the overall Oman market, the life insurance, life segment premium, if I say, if I bifurcate between the entire market premium into two segments, which is one is life segment and another one is non-life segment. So non-life segment premium ranges between 80% to 85% to 87.5%, whereas life segment premium ranges between 12.5% to 15% only. So when you look at the overall market premium size of between 575 to 600 million Omani Riyal, life insurance segment is comparatively low in Oman market compared to like Indian market structure or Malaysian market structure. Now, Oman market witnessed a drastic change in particularly in the credit life insurance when FSA implemented Unified Credit Life Insurance Regulation. So there it become a long-term policies. So it will give immediate boost to the top line. But all the growth come with its own problems as well. So what can happen is some companies might be very aggressive on the life insurance segment. Uh, Particularly that might give some short-term growth in those companies. But in the long term, since because of its actuarial impact and in any life insurance segment, as the portfolio gets older, you will experience lot many claims in the market. So in the future, it will give it can or it may give a lot of claims unless until you keep on pumping with a new and young portfolio into the life insurance segment. So Almadina's strategy as our ultimate strategy is to deliver the result to all our stakeholders and ensure the dividend payout to our shareholders. We have a balanced focus towards our life insurance segment and we are growing it. Our growth might be between 5 to 8%.
I'll put a little bit of spin on it.
Yeah.
What Anish said. Thank you, Anish. Because you said you were talking to another company, my competitor. And I understand your question, where it is coming from. We refuse many banks for their portfolio because it's a long-term portfolio. The banks take big commission in a different way. So you get a premium which is probably not worthy of doing business. When we accept a business, we look at it very carefully, whether we will make profit or not. If I am a CEO who has to show performance, short-term performance, make my bonuses and get lost to my country, then that's the best route for me to do. Because the as Anish said, the family portfolio, life portfolio, is something where you will get premium now. It's upfront premium, but your claims will start to come in year 5, 6, 10, and 20. When people get older, when people start getting sicknesses and unfortunate deaths, then the company is hit with the big losses. So it is a mechanism you can use for showing your results better now, but you cannot sustain. And why I'm saying you cannot sustain, if you are replacing the portfolio exactly the same numbers each year, then the new one are coming and older and becoming older, then over a period of time, probably you will even out, but that will be at least 50 years. And why I'm saying that, because Oman is a country where life insurance earlier was considered haram. Most people will not take insurance against the will of Allah, and your death and life is in the hands of Allah. And that's why Sharia calls it family insurance. So the depth of the family insurance is very, very, very low. The penetration is very low. People take family insurance only when they take a loan. And what percentage of the population is with the banks in terms of the property loan, etc., is known to everybody. You're an analyst, you know about. So I think that's what the family insurance is.
Thank you. And that brings me to the next question, because that slide that you spent time on the dividend payout and the yield, and you rightly mentioned, because Al Madina has been very interesting for my investors from a sustainability also and from a high dividend yield point of view. Is there a strategy you can commit to in terms of payout ratio? Because your numbers can keep changing in terms of how the performance is doing. But to get some clarity, because that's how you'll encourage some longer term shareholders to come in and be a part of the story. Is there a payout ratio that you have in mind when it comes to the company?
Well, we have a policy on dividend, and the policy is that we pay 90% of the profit. I'm correct? Or
Yeah, whatever the maintaining the balance between the four of the funds, and depending on the further future commitment, maybe.
Yeah. So keeping in mind the commitments, 90% of profit is given to the shareholders. We also have a strategy that if ultimately after evening out this FAS 40 to 43, and we still have the surplus left in the participant fund, we might return a small portion back to the policyholders and be the first in the region.
Wow. And finally,
You are an aggregator of the question, is it?
I mean, I don't see anyone else asking, but maybe because I have significant shareholding in the company.
You're making it lively. Yeah, sure, please go ahead.
What is the your strategy when it comes to the investment portfolio? There's been a trend that a lot of your competitors have actually outsourced it. Now, I know when I ask this question, there's a bit of an ulterior motive because I manage money on behalf of some of your competitors as well. And when I say I mean you, Ubhar Capital. So two questions, two parts to the question. The first part is when you look at the investment portfolio, how do you guys look at the equity versus fixed income versus fixed deposits allocation? That's one. Following, follow up to that question is what's the total return expected of this portfolio? And I'm not talking about PNL and comprehensive income. I'm looking at the overall sort of return that you look at from the investment portfolio. Just the philosophy that you adopt as a management to see how you can generate sustainable returns. And lastly, just wanted to hear your comments on how do you see this outsourcing exercise that comes in the market, because in English they say horses for courses, right? Guys are very good at insurance, but there could be guys like ours, and I'm not saying we are the only ones who are very good at managing investment portfolios for institutions like yourself. So that's the question that I had for you.
Yeah, okay, I'll let Hitesh answer that, but before he answers, if you are advising and running the portfolio of the competitor, then we are doing better than the competitor in terms of the number. And
Now
secondly,
you'll be surprised, actually. You'll be surprised, but we'll talk about this offline. You'll be surprised.
I saw the 6 monthly result. I'm talking about the info which is available in the market.
Yeah,
But
no,
if
you
we,
need to look at the equity and the fixed income portion, not the FD portion. Because
okay,
we are only responsible for the equity and the fixed income portion. We'll have a chat about this offline. Yeah.
sure.
So,
But
Abbas,
please.
thank you very much for your question. See, we believe in prudent management of our investment portfolio. As you see that we are consistently paying dividends for the past 10 years, and our strategy is to maintain a well balance between both the participant fund as well as the shareholder fund. The participant fund, you understand that there are various commitments on regard to the claims, if any rain or something is there. We need to have our portfolio to be more liquid and ensuring that we are earning sufficient stable returns on the participant side of it. With regard to the shareholder side, we do take some volatility in terms of real estate investments or our equity portfolio. Now, even with the equity portfolio, you will be with me that equity portfolio recently only due to this turmoil and everything, there has been a lot of volatility. But considering our portfolio mix, our portfolio has not been materially adverse impact on our investment income or our asset class. On an overall basis, our investment income has grew as compared to the previous corresponding period by 13%. And on the Sharia side, we have certain challenges, where like Mr. Shakib was mentioning earlier, that we cannot go and invest in any equity available in the market. We need to specify certain vanilla Sharia compliant stocks only. And in case if some stocks are out of the Sharia index, we have an obligation to purify them and get out of it. Okay. So considering all that, so we are very cautious and selective in deploying the capital what we have, but we ensure that any good opportunities there on the Sharia side of it, where we can enhance the investment income, we do look at that opportunities as well. Coming to your second question with regard to the management part of it, we are considering various options, how we can actively start managing our equity portfolio more in a robust way. Considering that now the returns are getting stagnant on the fixed income side, so we are evaluating that proposal as well on the equity side if we can go more into active management. Does that answer your question, or you have any more
Yes,
queries
part
on
of
that?
it. No. And the idea is never to ask you to increase the equity allocation or anything like that. The idea was to first understand in terms of the asset allocation on the equity, fixed income, and Wakala deposit side. That's one. And secondly, also in terms of a total expected return from the portfolio. So I think that's the part I was also looking to understand from you and the CEO in terms of how you guys look at this. And I understand everything else that you said resonates with me. This portfolio has to be stable. You're a high dividend paying company. You have obligations to meet. I understand all of this. We manage money for 3 other insurance companies, in the country, and one outside the country as well. And we are very aware of the laws, the obligations, the limitations, all of that. I guess my question more was to understand your philosophy in terms of what's the total return that you target, given the volatility that you're willing to endure in the portfolio. I think that's the part I wasn't, your question actually didn't answer for me. I mean, you gave a lot of clarity. Just wanted to understand from your perspective.
I think, Abbas, if we talk on those specifics, I think that will be better to take offline when you
Okay,
visit
sure.
us and talk to Hitesh about it. I wouldn't want to discuss the percentages, etc., on this forum. Yeah. Thank you.
Okay. Thank you very much. Good luck.
Hitesh will take you through to the H1 results, which we have just completed. Hitesh.
Sure. Thank you, Mr. Shakib. During the first half of 2026, the company has delivered a strong top-line growth, with gross contribution increasing by 15% to 26.8 million. The recognized taxable contribution has also increased by 8% to 21.8 million. However, the participant fund recorded a deficit, mainly on account of increased claim arising from torrential rains and the new accounting treatment under IOP standard. On a positive note, the investment income grew by 13%. We have reported 1.24 million, supported by strong returns from our fixed income and the equity portfolio. The shareholder fund delivered a strong profit of 1.6 million, almost doubling from last year on account of higher Wakala fee and improved investment returns. The combined profit of the company after comprehensive income was 614,000. The company's earning per share has improved from 0.005 corresponding period to 0.009, which displays the strength of the company's financial earning pattern. Moving on to the gross contribution mix, Al Madina portfolio continues to remain well diversified across various lines of business. The technical line continues to be the largest contributor, 41%. The medical portfolio has also grown as compared to previous year on the back of winning a few prestigious accounts. The motor and family portfolio continue to balance portfolio mix, ensuring that there is no much concentration on one line. With regard to the growth the company has achieved, there has been a 15% growth on year-on-year basis, and the market share of the company has considerably improved from 7% to 8% as of this corresponding year. This is a positive indicator of the company's competitive position in the market and also reflects the confidence of our customers in us. Moving on to the investment composition and the performance, the company has reported another strong quarter of investment performance. The investment income has grown by 13% over the last year. This reflects on the focus on generating stable and risk adjustment returns for the company. As I mentioned earlier, our portfolio has been resilient, well diversified, with no material impact on account of these geopolitical developments or market volatility. Our investment assets have in fact grown from previous year to 11%. 70% of our portfolio is in fixed income side of it, providing us stable liquidity returns. The balance is strategically divided between the real estate and the equity side of it. As of Q2 2026, all our investments remain Sharia compliant and within the regulatory limits. With regards to the company's financial position, the balance sheet continues to remain strong, resilient, with sufficient liquidity. The total assets are growing from 86 million to 93 million. The share capital is 70.5, which is well above the minimum regulatory requirement. The shareholders' equity has also grown from 23 million to 23.4 million on account of increased reserves and retained earnings. The accumulated surplus in the participant fund is 1.6 million. As a taxable company, this is one thing where Al Madina has been managing it very well to maintain a balance between shareholder as well as the participant fund. The net asset attributable to the shareholders is 134 paisa as of 2026 as compared to 2025, which was 131 paisa. This displays the strength of the company's financial position. For the outlook, I would request Mr. Anish to take over the session and provide the insights.
Anish.
Yeah. Good morning once again. So now when we see the outlook for the market, Oman insurance market is generally stable and it will show a moderate growth, which will be supported by regulatory reforms, and expected mandatory health insurance implementation, then infrastructure projects and economic recovery. We expect around 8 to 10% growth in the overall insurance market premium this year. And we expect that the premium size of the market might reach between 575 to 600 million Oman area. Now, in line with the 2040 vision, we have seen an economic diversification in the market, which boosted many infrastructure projects and connected the property insurance and liability insurance, which is giving a momentum to the insurance market. And accordingly, the technical lines of insurance companies will grow. Now, when it comes to the our plans on products and services, we expect the implementation of compulsory health insurance might happen very soon, and which will give a significant growth in the insurance market. Now, in line with that, actually, Al Madina also is in the process of establishing our in-house medical claims management team, which will give an opportunity for us to increase our growth opportunities, both in terms of a gross return contribution and profitability under health insurance segment. Now, as we are managing the risk, our strategies are focused on product innovation and reinsurance structuring and diversified distribution channel, along with the cost management in order to generate a higher profitability. In order to elevate the customer service also, Al Madina heavily investing on our digitalization process, and we ensure all the customers are getting a seamless service digitally from Al Madina. Now, when it comes to strategy, our strategy is focused on strengthening underwriting discipline, optimizing reinsurance structuring, and maintaining cost-effective management to drive sustainable profitability while steadily expanding our market share. Our focus is expanding companies' reach and visibility across the market through our strategic partnership and opening our agencies and kiosks in the strategic location across the market. Now, all the strategies are with an ultimate aim to achieve our 2026 budgeted target, and which we will achieve through effective strategic planning and disciplined execution. And we're in order to ensure a delivery of our expected outcome to all the stakeholders while driving profitability and maintaining a strong market position. This is our overall summary about the outlook of the market and ourselves. And I'll be happy to answer any of the questions if any of you have.
I think just one thing I will add on the outlook part, which maybe is not relevant for us, and that's why Anish did not touch upon it. There are lots of Chinese companies, Chinese reinsurance companies, insurance companies are coming into the market. And they're creating a lot of ripples, a lot of competition. But right now, it will be a challenge for the conventional companies rather than the Takaful. Because Takaful has its own client base, Takaful has its own pluses, minuses. They are not coming into the Takaful space. But however, the reinsurers are coming in here, making a dent and taking the business out of Oman. That's another thing which would be to look for. Any questions anymore? Anybody wants any questions? Happy to answer. Here, any questions which are relating to you only, then we can take it offline.
Good morning. This is Manna from United Securities. I just have a few questions if I can continue.
Sure.
Okay. So regarding the recent disclosure, just want to understand when the wakala fee has been reduced from 20 to 10%. So what would be the estimated impact on the fee income?
I didn't get you the last part.
The estimated impact on the fee income.
See, estimated income for the shareholders will be whatever it was last year for the health will become half. And it's a function of two things. It's not only a percentage, it's the top line also. Because you apply that percentage on the top line. If the top line is achieved higher than what we project for, then the fee income will be more or less the same. Because last year we were at 5 to 6 million. If we go to 10 million and we reduce the percentage to half, we are still achieving the same fee income. And I can give you that we are targeting to become double, meet that number.
Okay, so there is the
Mana, I
volumes.
answered you?
So you expect the volumes to increase to compensate for that?
Yep. Yes, but
Okay.
pretty much so. Pretty much so.
Okay, okay. Thank you.
Welcome.
Is there any other questions from anyone?
No more questions.
Okay.
Thank you very much. It was a very good session. And we're happy to answer any other questions which you may have, which we could not discuss on this forum. Feel free to contact any one of us. Finance related, Hitesh. Operation related, Anish. And anything which is not related to anything, me.
Thank you very much
Thank you.
for joining us today.